Well, we've got some interesting economic developments going on this week. I've been kind of uh, reticent to discuss the continuing collapse because I've been waiting for some more big fireworks, but things have gotten worse, and I haven't been, hammering on that as much. The ADP jobs report is out today, and that is just a survey. It's not the official government number, which people tend to take more seriously, but the ADP is kind of like a preview. Um, and ADP goes around and surveys industrialists and things, and tries to figure out how many people were hired in a previous month. And according to ADP, in July, only 167,000 jobs were added. And so that's incredibly weak. That's almost negative again, meaning that we're not really getting much of a recovery, which would go along with with what I was thinking. In June, there was a big spike up because the lockdown restrictions, the most draconian lockdown restrictions were lifted in a lot of areas, and there was a sudden surge of people, coming back to work. But of course, not nearly. It was nowhere near the amount of jobs that had already been lost. So in order for us to get anywhere close to the amount of people employed in America who were employed before this whole disaster, we would need many months that were as good as June. But I mean, this month pretty much looks to be nothing. Now, this is just the number of jobs added. It's not on net. So it's not like more jobs are being added than are being lost. It's still very negative. But I should point out that ADP has been wrong before. The ADP number is not always a great forecast of what the official non-farm payroll report will be, which should be coming out Friday, I believe. Trump was on Fox and Friends today touting the non-farm payroll report, saying that we're going to have a big jobs number on Friday. So that would lead me to believe, well, he wouldn't be saying that if the non-farm payroll is anything like what the ADP number suggests. So maybe ADP is just really far off this month. Or perhaps the job numbers are still kind of being rigged, kind of like the unemployment numbers were, or maybe it was the non-farm payroll report. The Bureau of Labor Statistics came out and admitted a couple months in a row that essentially their stats were totally off because they did the survey wrong, and they were counting people as employed who were unemployed. And so the unemployment rate was heavily suppressed. The unemployment rate officially only got up to 14.7%, but in reality it was, of course, much higher than that, and even the Bureau of Labor Statistics admitted that. So perhaps we're going to find out later that there was some funny business going on with this upcoming number on Friday, but who knows? I just find it interesting that Trump's sentiment seems to run so counter to what the ADP found. Now, the jobs numbers really are something that they're interesting, but they're always they are a secondary effect of economic growth. And we should be able to identify, how the economy is doing without resorting to looking at the jobs numbers. And so, with that said, looking at the economy and what's been going on, and what has happened since the initial shock of this depression, I'm not surprised that the job market would be quite slow. I really haven't seen anything to indicate that we're moving towards recovery. All the government has been doing has been trying to alleviate the pain of the initial blow. But because of that, of course, the country hasn't been able to start healing in any way. What we've witnessed is like the response to 2008 on steroids. And we, remember that what happened after 2008 was the slowest recovery since the Great Depression, for good reason. Because everything the government did just numbed the pain to where the economy could not heal. Because if you don't know what's wrong, if you can't feel the pain, you can't correct for it. And so we became trapped in that malaise. And it took us, a decade to add a number of jobs to the economy that has been that has been wiped out times two since this whole Wu flu pandemic began. It seems the only thing that our government really is capable of is propping up the stock market, which of course that's the Fed, but the Fed is a creature of the government. They don't directly control the Fed. but they created the Fed, and they don't really have any problem with what the Fed is doing. It's gotten pretty boring watching the stock market because all it ever does is go up. If there's good news, well, then that's of course an excuse for the stock market to go up. But if there's bad news, then that's an excuse for the market to go up too, because well, then that means the Fed is going to do something and give us some kind of goodies, in response to the bad news. So all news is good news for the stock market. No matter what happens, Wall Street always wins. But it would seem that, the Fed's actions are having a bit of an impact, finally, a negative impact, and that the printing press doesn't seem to be without consequences. The MMT crowd, for example, has been saying that, in the U.S. we can spend as much as we want. We've got the world reserve currency. All we can do is just print as many dollars as we want, and we can buy the entire world. And that's pretty much been the philosophy of the Fed for quite a while now. The idea is if we just print enough money, we can just make the stock market go up forever, and there will be no consequences. But the dollar in the foreign exchange market seems to be tanking recently. The dollar index is all the way down in the 92s, which 3 months ago, it was up around like 100. And so that means that the dollar's fallen like 8% or something. That's not really normal in the foreign exchange markets when you've got the world reserve currency. The dollar is supposed to be incredibly stable. It's supposed to be pretty boring. Now, obviously, with the dollar being at 92, that doesn't mean that that the world is ending. It doesn't mean that all of our import prices are going through the roof yet. The dollar's been lower before, and America has gotten by just fine. But given the rapid speed at which the dollar has plummeted down to these depths, it begs the question: how much lower can it go? And at what point does the dollar's weakness in the foreign exchange markets make it, make imports so expensive to the United States that consumers really start to feel the pain, in the form of domestic, consumer price inflation? It's a fact that in America, we import a lot more than we export. And so if the dollar is falling relative to other currencies, that means that our purchasing power for most of what we buy is also falling. And perhaps this has something to do with Americans, consuming so much without producing anything. The same thing I've been talking about, since the whole lockdowns began. And the plan became, okay, well, let's just send everybody checks. I said, well, you can't just produce things, or you can't just consume things without producing. That's not how this works. If everyone has money and nothing to spend it on, well, then that money's worthless. And obviously there's still stuff to spend it on now, but it would seem as though those resources are drying up when you go to the store. There's quite a few bare shelves still. There just seems to be constantly, there are certain items that are hard to come by. You go and the aluminum can shortage, for example, there's a lot less variety now if you look at all the soda pop and things on the aisle. America's chickens might finally be coming home to roost. You can't just print your way out of a recession. You can't just try and buy up the entire world with funny money and expect that your currency is not going to lose value. And I'm not going to go out on a limb and claim this is the end or anything like that for the dollar, because plenty of people have done that before and they've always been wrong. All I'm going to say is that our monetary authorities are always playing with fire when they do this, and one of these days they're going to push, and they're going to push too hard, and it will be the end. This whole lockdown situation has been perhaps the most absurd monetary experiment that I've witnessed, in my lifetime. Actually, definitely is. What am I saying? And there's been, you could say there's been dumber experiments in the past, but those have always been isolated to, smaller countries, not to the world's global superpower. And so if the dollar really does start to slip for real, things are going to get bad here very quickly. And so you really should be prepared for that. You should have enough resources on hand to sustain yourself for a while. Because, if we continue down this road, we're going to get to a point to where there just simply isn't anything left for us to buy. And when that happens, your money will be worthless, but your resources will not be. Things that are actually of value that people can use. That's what you want to hold on to now. Bags of rice, ammunition, stuff like that. And so just be careful until this is all over. Because, as long as this crisis persists, that danger is going to remain. And it doesn't really happen all of a sudden. It happens slowly and then suddenly. And right now we're watching it happen slowly. It's taken quite a while for the dollar to get down to 92. But in the grand scheme of things, it's happening quite quickly. So at this point, you should keep an eye on the dollar because that is sort of a forward indicator of what prices will look like in this country. And if prices do go up across the board in America, again, expect more civil unrest. I've been saying this for a lot of reasons lately. There's a lot of reasons that people have to be out in the streets rioting. There's a lot of risk of civil unrest in this country. And if you want to keep yourself safe, you need to be prepared and you need to keep an eye on what's happening. So with that said, if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.